Okay, so what you're saying, people, welcome back to my channel, and today I'm going to be sharing with you a simple beginner strategy for you to get started right now. But if you're new to my channel, make sure you hit the subscribe button and hit the bell, because I'll be dropping a lot of Forex related content in the future. I'll be talking about different strategies, different tools, different techniques, all the good stuff. So if you're a beginner and you want to learn more, make sure you hit the bell so you don't miss anything out. So for people that have never traded Forex before, they want to get started, or people that are struggling and they just need a simple strategy that you don't need any prior technical deep knowledge about or much understanding about Forex, this strategy is perfect for you. So let me stop chatting and let me introduce you to the strategy. Okay, so in front of you now we have the beginner strategy. Okay, so first I'm going to talk to you through the components of the strategy, the different tools that we use, and then I'm going to talk to you how to actually use the strategy. Okay, so the strategy is made up of 4 components, 2 indicators and 2 moving averages. Our first indicator is a support and resistance indicator, which basically draws our support and resistance levels and support and resistance areas automatically for us. So I know for a lot of beginners, they may struggle where to draw their support lines and where to draw their resistance lines. So this indicator will just do it for you, so you don't have to worry about that. But if you still want to learn how to actually draw them yourself, I have a video about support and resistance you can go check out, and I'll leave a link to that in the description. But for this strategy, we're just going to use the support and resistance indicator, and the red bar here represents resistance and the blue bars represent support. And now our second indicator that we use is the trend indicator, which are these arrows at the bottom here and this arrow at the top here. Now the arrow pointing up indicates to us there's an uptrend in the market, and the arrow pointing down indicates there's a downtrend in the market. So when the arrow is pointing up, we only want to be looking for buys in the market, and when the arrow is pointing down, we only want to be looking for sells in the market. And then we use 2 moving averages to help us enter the market and take our profits. So the first one we have is the 200 moving average, which is this large purple/pink moving average, and we use that for more of a center line in the market, for a bit of guidance for the large trend of the market. So when price moves away from the moving average, we expect the moving average to catch up and price to move back towards it. So we can use the 200 moving average as a place where we set our targets to exit the trade or to take profits when price hits it. And then we use the 40 moving average, which is this brown trend here, for our smaller trends to help us enter the market and exit the market. So these 4 components, the 40 moving average, the 200 moving average, the support and resistance indicator, and the trend indicator, are the 4 components that make up this strategy. Okay, so now I'm going to show you how to actually use it, how to combine all these components to create a strategy that works, and it's simple for beginners. Okay, so on your screen now is Euro JPY on the 4-hour chart, and now I'm just going to explain to you how we can enter the market using our strategy. Okay, so you can see that we have this green arrow at the bottom of our screen indicating to us that price is going to reverse and we'll start with a new uptrend. And you can see that our support resistance indicator has given us a blue bar at that green arrow indicating that price is now at support level. So now those are two ticks to our strategy. We have a new uptrend and we have a support level. Now all that we're waiting for is to enter the market is for price to close above the 40 moving average, and you can see price closes above the average on this candle here. And if I zoom in, you can see it a little bit better. You can see price closes above the 40 moving average on this candle. So now we can enter the market and then ride the move up until when price closes back below the moving average, and then we close our trade and take our profit. So we would enter the market at this price here on that candle as it closes above the moving average, and then we'll exit the market on this candle here because it closes back below, and then this here from that line to that line is our profit. You can see 94 pips profit, and that is how we enter and exit using this strategy. Okay, so now we're going to take a look at our second example, and now you can see that the arrow is pointing down instead of up, indicating to us that a downtrend is going to start in the market. So now we're only looking for sells. Now we can see that we have this support resistance indicator giving us a red bar at that same level where the arrow is at, showing that Price is now at a resistance level, so this is a good place to start shorting the market. So now for us to enter the market, all we need is for a candle to close above or below the moving average. In this case, we're looking for sells, so we want the candle to close below the moving average. And you can see this candle here closes below the moving average, and that's where we enter the market. And we exit the market when price closes back above the moving average. And you can see this candle here, it just about closes back above. So our profit would be about 180 pips. So now that I've shown you this strategy, you can see that it's a very simple, basic beginner strategy. You don't need much technical knowledge. All you need to do is able to read the indicators and know when to enter and exit the market. And we can also use the same strategy to get back in the market after a pullback or a retracement to get back into that larger trend. So for example, you can see in this market that we have that uptrend indicating to us that price is now going to move in an upwards direction. So we have a pullback, and let's say we're trying to get back into this trade. So you can see that we're only looking for buyers in this market, and you see that the market has made a push up, come back down and went back up. So we can get into the market after that pullback is finished, and we wait for the market to close back above our 14 moving average. So you can see that this candle here has closed back above that moving average, so we can enter a trade and exit when it closes back below the moving average, which is back up here. So you can see that we would have captured a very large trade here of around 500 pips, 570 pips, almost 600 pips. Again, this is a 4 hour, so the trades will be slightly longer. But sometimes you'll be in a situation where you would took a couple of trades and had the small losses before you get to capture the actual pullback and the actual move in the market. So let me show you an example. You can see here, this is the initial move that we would have captured. We had a pullback, and now we want to look to enter back up again so we can get that large move back up. So our conditions are same direction as trend, so the trend is up, so we want to be looking for buys in the market, and then we want the candle, price to close above our 14 moving average. So you can see that this candle here closes above the 14 moving average. That's our trade, and that's where we get into the market. But then you can see that the next candle actually closes back below the moving average, so we would exit the trade, and obviously we would have taken a loss here. But because we're using this 14 moving average to enter and exit our trades, that means that our losses will be kept small because we're just using that moving average above it and below it. So we would have taken a loss there. But then if we get back into that same trade on this candle, as you can see, it closes back above, and then you can see that the rest of the candles stay above, we ride the move up, and next time we exit the trade is up here. So you can see that we would have captured here almost 200 pips. We would have taken a small loss there, so that'll probably be no more than 20 pips roughly. Let me just check. So from the top of that candle where we enter to the bottom, 17 pips. So you can see that we would have lost 17 pips in the last trade, but we would have got more than times 10 of that in our next trade after that, and we would have got a lot more in this move if we captured that one as well. Okay, so now we're going to take a look at taking profits when we have a winning trade using this strategy. Okay, so there are many ways that you can take profits. One way is taking profit when you hit a certain number of pips in profit, and this will depend on which time frame you're trading on. And you can use this strategy on multiple time frames. So this strategy can work on all the way down to the minute time frame and all the way up to the monthly time frame. And if you're starting out and you're a beginner, I probably recommend that you start on maybe the 4 hour and start trading using this strategy on that chart, and maybe even the monthly. And the reason is just because these time frames are slightly slower, so you don't have to rush into trades and you can really take your time, and you don't have to be anxious or anything like that. So if you're using the strategy using the 4 hour chart, you're probably looking to take profits around every 50 pips, I would say. So when you got a winning trade and you hit 50 pips, you can take some of your profit, like 20% or 30% or even half, and then at the next 50 pips you take some more profits, and so on and so forth. But if you're using the daily, obviously you'd be gaining a lot more pips because the candle's a lot bigger. So probably 100 pips maybe. Every time you hit 100 pips, you take some profit, just to make sure that your account is always growing. You could also look at the 200 moving average to take your profits. So if I zoom in to this example here, you can see that we have that new trend indicating a new trend to the downside. We have that resistance bar, and this large candle closes below the moving average. We can enter a trade as our criteria is met. We sit in the trade and wait for price to go back above. Price goes back above there, we exit the trade, and we're looking at 130 pips profit. But also price did move past this 200 moving average, and the 200 moving average, you need to remember that it can act as both a support and as a resistance. Price could easily reverse at the 200 moving average, so it could be a place where when price reaches that, you take some profit just to protect some of your winnings, because you don't want to give back most away your profits when you're sitting in 60, 80 to 100 pips in profit and you give back 80 pips, which doesn't make much sense. So the 200 moving average could be a great place to take profit at, and then you can exit the trade completely when price goes back above the 40 moving average, which is down over here. So those are two ways that you can take the profit, and all you need to do is just pick one and constantly work at it and abide by those rules, and you will see your account grow because you're constantly taking profits, you're taking in winnings, and you're keeping your losses small, and your account will grow over time as long as you're consistent with your strategy. Okay, finally, before you go away and practice, I'm going to tell you some things that you need to avoid when using this strategy. Okay, so this strategy is a trend capturing strategy. It follows trends. You're trying to capture the start of trends, trying to capture reversals, trying to capture pullbacks. This is not a strategy for when the market is moving sideways or ranging or consolidating. It's for when the market is trending. So an example here for Euro JPY in the 4-hour chart, you can see that we have this area here where price is just moving in no direction at all. It's just going from up and down, side to side, and you can see that it closes above and below the 40 moving average many times, so you would have a lot of losing trades in a short space of time. As you can see that we have that green arrow at the bottom indicating a new trend to the upside, but you can see that there is no real trend yet. The market is still ranging, going up and down, moving sideways. There's no real direction in the market, and that's not a market that you want to be entering using this strategy, because you can see that we're using moving averages, we're using trend indicators. This strategy is specifically to find trends in the market, and when the market looks like this, you don't want to enter the market. Just let the market be, move on, go look at a different currency pair, and just avoid getting into the market when it looks like this, because the strategy will start to become ineffective. Okay, so that's it. That's all you need to know for this very simple beginner strategy. I'll leave a link in the description for the template for this strategy. All you need to do is just download it and then upload it onto your MT4 platform. I'll leave a link in the description for 2 brokers as well, where you can open a demo account, get practicing, and download MT4 from both of them as well. So I'll leave a link in the description for them too as well. And also, just to fully help you guys understand what's going on with the strategy and how to use it, I'll be opening a live £500 account, and I'll be growing it using this exact strategy that I've shared with you today, using the trend indicator, the support and resistance indicator, the 40 moving average and the 200 moving average, and I'll be using the exact strategy to grow the account from now all the way till the end of the year, so for the next 6 months. So make sure you look out for that series. I'll be dropping at least 1 video a week, recapping all the trades that I've taken for that week and speaking on it, and speaking about the losses, speaking about the wins, and just updating you on how the account is growing through the next 6 months. Okay, so that brings us to the end of the video. But before you go, the link to all the tools that I use in my strategy today is in the description, so make sure you go and check that out. But I do hope that you enjoyed the video today. Drop a comment if you found this helpful or if you have any questions. But till the next one, I'll see you later.